In this video, I'll show you which time frames to use when trading memory. One of my subscribers asked which time frame to use when trading memory and which risk to reward to use. So when trading memory, there's two ways to utilize the strategy. You can utilize a 1:1 on any time frame, meaning when your trade forms, you can just enter from the same time frame you've analyzed, and the time frames will be chosen by your account size, as you cannot take trades from the daily or 4 hour with a small account. You can trade from M15 or M5 time frame if you are a scalper for quick trades. The other way is you can choose two time frames, the parent time frame and the entry time frame. For example, you can analyze from M15 and take trades from M1. This is what I mean. Analyze M15 and look for flip patterns to enter from on M1. And if you choose this one, you can take any risk to reward you want. As long as you can trail your highs and lows, you'll be able to manage your risk to reward. Let's recap. First one, you can take trades on the same time frame you've analyzed, but you'll only utilize a 1:1 risk to reward. The other way, you'll pick two time frames. The parent time frame, which will be your big time frame, and your entry time frame, which will be where you will take your trades from. And you can take any risk to reward as long as you can trail your highs and lows. Let me show you this so you can understand better. I mark my zone using a fib, and I look for areas where price might reverse after it pulled back to the 50% area. So there's an order block here, and there's another order block next to the 50% area. So inside these order blocks, we look for a bearish flip pattern in the small time frames. If you are taking the 1:1 trade, you will enter as soon as price reaches 50%, and your stop loss will be above the zone, and you'll take your profits as soon as price gets to your 100% area. But if you choose the two time frame system, you look for trades inside these order blocks in the small time frame. On the 1 minute time frame, we get a flip from the order block next to the 50% and a nice retest, but it didn't go far. It would have hit your stop if you took this first order block. You also get a break to the upside, and we get a change of character and a nice retest. Price gave us a nice flip to capitalize from. The second trade will cover that small loss you would have taken from the first OB, and you would have made nice extra profits. Let me show you a step index example. Mark your range or zone from the low to the high that breaks that same low. Drag your fib to identify your 50% zone and wait for the chart to retrace to 50%. And go to M1, look for a bearish flip pattern. On the 50%, we had a break of structure plus a change of character. Price tested the OB that broke structure, and that's why you'll take your trade to take the recent low and more. Or you can take a trade as soon as the chart reaches 50%. The name of the strategy is called Memory from DTFX. Watch this video to learn more about this strategy. Don't forget to subscribe so we can reach a broader audience.